Welcome back. You're watching us here on Chartbusters. Let's talk about the rice processing and exporting industry, KRBL. The recent rice export curbs came by consumers in Asia. Africa have to pay higher prices for rice grains. Well, a lot has been happening. We're also talking about the monsoon prospects of a weaker monsoon this time around. We have Ashish Jain, who's the CFO of the company, joins in to discuss the business impact of all of this in detail. Thanks a lot, Ashish, for joining in. Everyone's talking about El Nino. I mean, how do you think the paddy crop will be affected? Of course, there has been no official statement from any of the Indian Met officials with regards to monsoons, and it's understandably a little too early to do so as well. But do we have enough stock if the weather does get affected?
Yeah, so thank you for having us. So rice, as you know, tends to be a winter crop. Bulk of the rice in India is harvested in the months of October to December, and the crop itself gets sown in the month of June and July.
Got it.
So, unless these trends play out adversely, there may be some impact, but otherwise, let's wait and watch for that.
All right. So we will wait and watch for that. And there's also news that, recent export curbs have increased export realizations. Are you seeing a similar trend? I mean, could you give us a sense of realizations for you, both domestic and exports? And how are these numbers likely to be in the fourth quarter versus third quarter?
Sure. So I think the country as a whole, both in exports as well as the domestic market, has seen a higher realization this year as compared to last year. Some of the factors that have driven that are generally higher demand amid the global geopolitical concerns. This has kind of got the countries to focus on food sustainability because of its demand tends to be robust. The second factor that we keep hearing about is the flood situation in Pakistan that affected their crop. So these two things, amongst other factors, have led to a general high in prices during the current year. So we've naturally benefited from this in terms of our realization, which tend to be higher this year as compared to last. In terms of the current quarter, we are seeing the trend continuing broadly. If you look at rice prices, they are marginally higher than what they were at the end of last calendar year, which is December 22.
All right. Hi, Mr. Jain. Good morning. Nigel on this side. So for quarter four, export revenues will be in that vicinity of 550 to 600 crores at least?
Yeah, Nigel, as you know, we don't give out guidance, but the quarter will be in line with the previous quarter. So okay. Yes, around that range, I would imagine.
All right. Mr. Jain, we'll get back to business in just a bit, but I want to focus on the cash that you have in your books, because that's something that gives you valuation comfort, which is very, very important. And also, I just looking at your valuations, I think you're trading at around 11 times, PE, which is rather cheap. But the cash in the books, firstly, can you tell us what is it? As of 9 months, your other income is around 50 crores. So what's the cash in your books?
Yeah, so, if you look at our cash reserves, our business tends to be cyclical. So we accumulate cash starting roughly Jan or Feb of the year. This goes on to September, after which the cash gets utilized as we buy inventory for the on incoming season.
Right.
So, that's how the cash cycle moves for us. Now, therefore, we conserve cash to finance the inventory as much as possible to reduce our reliance on debt and therefore the finance cost as well.
Okay. All right. The point that I was getting to, I think, on an average, I think for the year, you must be maintaining a cash balance of around 1,000 crores?
Yeah, more than that, actually.
More than 1,000 crores. Now, Mr. Jain, your market capitalization as of now is what, around 8,000 crores approximately. You are sitting on cash, which is 15% of your market capitalization. And given you have some cushion on PE, the street is wondering why you're not going ahead and doing a buyback. Your ROC is getting diluted because of the last cash balance. If you do a buyback, some of those shares come back, equity will reduce and ROC as well will move up. Have you all thought of a buyback? And why haven't you all done it till now?
Sure. So, see, I think the larger question is on, the profit distribution policy of the company. So we have a very well-announced dividend distribution policy. As far as buyback is concerned, that's something that's being considered again, and we are also looking at it right now. More I'll be able to get back to you once we've completed internal discussions also along with the board.
But you all have discussed this in the past as well, but no announcement came of it. So this time, do you think that the board is more serious about probably looking at the possibility of a buyback? Because that's something that your shareholders are looking forward to.
Sure. No, so I can assure you the matter was looked at very seriously earlier as well, and the same is also happening this time. So I think wait for us to sort of get back to it around the time of the next board meeting.
All right, okay, so is there a possibility of this happening in this financial year by any chance, if at all? Or is there, I mean, there would be further deliberations and perhaps nothing would come of it as it has happened earlier as well?
See, it's difficult to comment on it because, this internal process has not been concluded.
Sure.
So like I said, we'll get back on this.
Okay, no problem. What about the Unity brand? I mean, it's what, almost a 600 crore brand now. What target do you have for FY24 for that one? Any plans of, unlocking some value at some point in time once it reaches some critical mass?
Yeah, so Unity, as you know, the whole idea behind Unity is to make it easier for the consumer who currently consumes loose rice, whether in the retail segment or in the Horeca segment, to move to consistent quality branded rice. So yes, as we speak, the brand has a run rate in excess of 600 crores. We are very positive on this brand, and we're looking at least 15 to 20% growth over the next 1 year.
Okay, final couple of questions before we let you go, Mr. Jain. I think you have around 40% market share, right? Volume market share in modern trade channels. Could you give us an updated number, point number one? And also, in the past, I've quizzed you whether or not you're heading towards that long-term aspiration of getting to around 8,000 crores by 2025. Is that on the cards? So market share and 2025 goals.
Yeah, so market share, the number that you mentioned is what we reported last year. The latest estimate typically gets to us by the end of the quarter, which is when we disclose it to the investors as well. I think in terms of the long-term plan, absolutely. I mean, may take a little longer. However, we are very focused on the long-term aspiration of 8,000 crores. Couple of steps we've already announced in this direction in terms of our capex around setting up 3 new plants across the country. Both which will cater not only to basmati but also to non-basmati, which is a very large and in our mind sort of unaddressed opportunity for the country as a whole.
Right.
So that which is basmati, the non-basmati foray, besides other products, is what will get us to the number that you mentioned.
Right. And do you have any targets on how much of your revenue do you intend to get from non-rice completely? I mean, there is basmati, there is non-basmati, and then there is all the other packaged food items that you would be selling.
Yeah, so I think right now the number is tiny. We are looking at least 500 to 700 crores coming from non-basmati over the long term.
Non-rice or non-basmati?
Non-rice.
Got it. All right, take that point. Thanks a lot for joining in and giving us all those details. Wish you good luck, and we will await any sort of development coming by on the buyback or utilization of cash as well. Take a short break, come back, get you more on the markets. Take care.